Sabharwal joins us. Let's connect with him. Sandeep, it's been a good comeback by the markets. Good comeback. I mean, May in a sense has been this transformational month. We started the month of May. There were a lot of concerns how much more markets would go down. Surprise, surprise. We are closing the month on a high note, and now we've started discussing how much markets will go higher.
It's March, actually, not May. So
Sorry,
you,
March,
you think
March, March,
you're
March. My
you are
bad.
forecasting that May will also be
No,
good.
no, no. March. Sorry, just got a bad cold.
So I think when things go to extreme, I think the mean conversion happens, and I think that's what has happened. So I think there was extreme negativity, and markets took off when extreme negativity had come to its peak, and that's the typical feature because see, finally, the call every investor in the market has to take is whether they believe that the bull market has ended or you think it's an ongoing bull market and there's correction in between. So my view is that given the macro trends and the fact that we are in a reducing interest rate cycle and earnings growth this year was very subdued. Next year, the earnings growth is expected to be three times that of this year. Like this year, it will be broadly 5%. Next year is expected to be 14-15%. It's tough to build in a case there's going to be a bear market. So I think many sectors and stocks have come back. Many companies are still doing well, and I think we will see them also come back. Global uncertainty obviously is there because of the various tariff war. So right now, US is only imposing, so other countries could follow, and that could impact global growth in some ways. So I think globally linked companies could underperform in the near term. So, but I think there are enough domestically linked companies like financials are pure domestic. Most capital good engineering companies are mostly domestic. Most defense oriented companies are only domestic, and so on. So I think there are enough and more pure domestically oriented companies which investors can invest into.
So let's look at what is in store, Sandeep, in the month of April. I've consciously corrected myself. April. Tariff, earnings, RBI MPC. These are all market moving events. What happens in tariff could move the market. What comes out of RBI could set the tone for banks and for financials. And in terms of earnings, we will get a direction whether the economic slowdown is behind us or not. April is all about news. Would you concur with me?
I think so, but I think among all of these, the RBI monetary policy is the most important because what steps they take to further ease liquidity in the system is most important because liquidity is the grease on which the entire economy works. So I think that's the most important thing. I think the tariff so this entire tariff thing, in my view, will die out post 2nd of April, and that will be the day when most of the so I think after that we'll be back to basics. Earning growth expectations, like I don't expect anything great in the current quarter results also, but I think going forward, given the fact that the first quarter of last year was very subdued and overall the last year was subdued, so I think as the base comes into play, we will see that earnings growth picture will start improving from the first quarter onwards.
There are some changes that Greed and Fear has actually made in their portfolio, or Jeffries, I should say. They're actually upping their investment, or rather reducing their investment in Godrej Properties. Investment in macrotech developers, they say, is going to be increased 1 basis points or 1 percentage points to 4%. Investment in DLF will be introduced with a 3% weightage. And of course, there are many other details that they've listed out. But first, Sandeep, I want to pick up on the point on real estate right now. I mean, we all know that it's a structural story. It's about timing it right and which stocks you actually buy. What is your thought on what exposure one should have in realty looking at today's prices?
I think looking at today's prices, the exposure should be low because of the fact that the current year will be tough for real estate after 3 to 4 good years. We've seen property transactions come down. We have seen the sales velocity has come down, and the price increases have completely stalled. So in that context, it will be very tough for realty companies stocks to perform. So although on the flip side, easing monetary policy is obviously positive for real estate, and with a lag, it could help the overall demand scenario. But in the near term, I would still think that real estate, at least next 2-3 quarters, could have a tougher time.
Uh, but another pocket which, by the way, I read somewhere in the morning that VIP has resumed their stake sale stock. And I'm asking VIP why, because I think Sandip Sabharwal had a buy on VIP, if my memory serves me right. Or I'm getting old,
Yeah,
Sandeep?
we had bought a year back expecting the turnaround, and the turnaround never happened. So I think we are still
बेच भी दिया.
holding. No. We are still holding some small quantities of the stock, expecting a turnaround at some stage. But I think at this price, it's extremely cheap. Sell off or not, I have no idea.
Okay. Let's look at Tata Motors yesterday. It just got tattered. Now, what is the connection here? The connection is very simple. 80% of the total revenue of Tata Motors, it comes from JLR. Within that, 25% of the total, 32% of the total business of JLR comes from US. United States has increased tariffs on all autos manufactured outside US by 25%, which means that suddenly JLR cars which are moving into US, they will become expensive. Now my point is that, is JLR competing with Tesla? The answer to that is no. Is JLR competing with Ford? Is JLR competing with Chevrolet? And if 25% tariffs are imposed, will the market share of other cars go higher? I don't know. I mean, sometimes you will pay more because you want to buy a brand. And if JLR is able to demonstrate with their cars that they are able to regain market share and mind share, then what looks like a tsunami may just start neutralizing in a quarter from now. But Sandeep, ultimately when you buy a stock, you have to figure out what is in the price. At 650 broadly for Tata Motors, do you think a lot of this bad news is in the price, which is JLR, tariff, debt?
I would think a lot of the negatives are in the price, but uh, this US tariff will have an impact because of the fact that so there are enough domestically manufactured vehicles in the US which might not directly compete or might not be a one-to-one comparison with JLR. But then if let's say the prices of the vehicles move up by $10,000 because of, or $20,000 because of the tariffs, then there will be, I think, at least half the customers which might decide that let's buy something else. So I would think that there will be a definite impact, and to that extent, uh, it might be a cheap stock, but then there are no triggers. If at all, there are some negative triggers because even in domestic autos, CVs are not doing as well as the rest of the segments. So I think it will be a troughing kind of phase for Tata Motors rather than expecting a V-shaped recovery anytime soon.
Okay. So what could be that big turnaround idea, Sandeep, for this calendar year? When I say this calendar year, 2 days from now, I mean, you've always given us ideas where I remember, I think 2024, you said 2023, you said Tata Motors could be the stock of the year. It turned out to be the stock of the year. Then we started speaking about Mahindra and Mahindra at the beginning of the year that it could be stock of the year. It is a 40-45% this year. We spoke about Indian hotels in 2022. It's done very well. There are a lot of these interesting ideas, Sandeep, which touch wood periodically you pick up, where they are cheap, there's pessimism, and then when things neutralize, whether it's operating leverage or financial leverage, they just rebound.
So I think there are very few very cheap stocks in the market actually. But there are companies I think which are underappreciated in terms of value. So it depends on what you are targeting in terms of your return. So I think in the large cap universe, I still believe that many investors and fund managers are still underestimating the earning growth potential of, let's say, a Bharti Airtel. It's at a near an all-time high, but I think the kind of deleveraging it's going to see and the impact on its balance sheet and profitability is still being underappreciated. And despite being at near all-time highs, its ownership among most fund houses and large cap funds, like no one has it in its top 10. So I think this should continue to do well. The other stock on large cap, I think, which is underappreciated is L&T, where I think the kind of order wins they are seeing vis-a-vis how the stock's done and how they have actually maintained their order flow and execution cycle in tough macro environments also is somewhat underappreciated. So I think these two stocks should do well. On a battered stock in the large cap side, I would bet on something like a Bajaj Auto because I think that's fallen nearly 40% from the top. And there, I think markets are excessively pessimistic on the overall two-wheeler cycle, and especially Bajaj Auto, given its strong presence in the export markets and the kind of revival they are seeing on the export side. So once domestic sales also start picking up, I think it will aid to the stock performance.
Quite interesting a list there. There's, of course, Bharti in there. There's Bajaj Auto, which also Sandeep is liking. But Sandeep, other than that, also wanted to get your thoughts from some of the mid-cap ideas. L&T, of course, is the other large cap that you talked about. But, companies like Viatech Vabag, for very long, these, stocks went to into a hiatus mode. And then suddenly when the order inflows started kicking in, I think in the last 1 year, it's finally done well. Any mid-cap ideas that you're convinced are going to be the leaders in the next fiscal?
I think Viatech Webback will continue to do well. I think the kind of orders they have won, the zero debt status, as well as the overall impetus on the water side should help them do well. Like we talked of NCC and the kind of order wins they have had. So their growth collapsed this year because of slow execution across cycles. But the stock's down 40% from the top. So I think that's one stock which should see a turnaround. On the defense side, I think a few companies actually stand out, and among them is Bharat Electronics, where I think the order wins they are getting and the execution. So one is order wins. So there are companies who have orders, but they are not able to execute as well, which include many companies in shipyards or even a company like HAL, etc. But here is one company which has a strong execution, so strong order wins. So I think here the performance should sustain, and I think this company should do pretty well.
Okay, Sandeep, great to have you on the show. Thanks as always for your time. We'll let you go on that note. Bunch of other stocks.
If you like this video, then like, share and subscribe to ET Now.